The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with our humble, lovable, squeezably soft host going in to the depths, to the bowels of summertime trading. As we start this show off today, what do we have for a market? We're up 9-10 points, 1.7 billion shares, so very, very light trading. Of course, we've got a very big week coming out for retail, although I don't think that's going to move the market too much. After hours tonight, well, we got Urban Outfitters, and I think that's probably about it. When we look toward tomorrow, much more interesting. Walmart in the morning, Home Depot, TJ Maxx, Dick's Sports, Hanes. What do we got? After hours tomorrow night. Lazy Boy, anything else? I think that's about it that would even think about moving the markets. On Wednesday morning, we've got Target, Lowe's, what is that? SPLS, Staples, a couple of kids' clothing brands. They've been doing horrible. After the bell on Wednesday, we go to Intap. Anything else? Yoku. That's about it. Thursday in the morning, we got Tech Data, JK Solar. Let's see if there's anything. A lot of small stocks. Thursday after the bell, HP and GPS. So that's talk about a bad symbol for a company. GPS should be for Magellan or any of those GPS companies, but not Gap, the clothing store. GPS. Doesn't seem like it. Ross Stores after the bell, of course, on Thursday night. Salesforce, that's probably going to be the big one. Intuit, Marvel, Broadcom. What else we have? Tuesdays, UPS, CMRT. Man. Of course, and then Friday morning, John Deere. So that pretty much wraps up the biggies this week. So there'll be a little out there. I think John Deere, probably it, and Walmart, maybe Home Depot might be able to move the markets, although I have a feeling that the die is cast somewhat for this week. We'd have to have a pretty big miss for any of those to really move these markets. I think they got time to get it done. John Deere may be the one that really does truly move these markets into expiration on Friday. Pre-market. I'm trying to think if there's anything else. I don't think anybody's really... I mean, it's retail. I don't think retail's really driving these markets up or down these days. Kind of drives sentiment, but not the indexes so much. But anyway, as we get started with yet another week of broadcast excellence here at TFNN, it's time for a little history.
And it's all just a little bit of history repeating.
The Russian government in 1998 on this day devalues the ruble and declares a moratorium on paying its foreign debt. The de facto default that sends the global market bond markets crashing triggers the collapse of U.S. giant hedge fund long-term capital management and sends shockwaves. I said shockwaves through the world's financial system. And of course, that basically hit a note in that October-November timeframe in 1998 that kind of a watershed moment where we found that the government would save anybody from just about anything. And I think one of the reasons why we continue to have these boom-bust cycles where the Fed can never seem to find a reason to raise, but always to go to zero. And the distortions in those markets are going to cause the same distortions that caused this big brouhaha, in 1998, leading to the demise of long-term capital management. There's about 4 or 5 books written on this. I suggest you probably at least read one as a trader to really understand what happened and how far that some of these big institutions can go wrong. Dodd-Frank's done a little bit about it, but my guess is that we still have massive amounts of risk-taking because, of course, it's not their money. But it is it. Max Payne is going to be 2,100 on the S&P cash. So I am pretty sure that we are going to, in fact, I'll show that chart later, but the S&Ps really look like we've got little or nothing to the upside or the downside this week. And that's not uncommon coming into a end of summer move. Most of the A teams on the trading desks are off in the Hamptons. They leave the B team with one big job. Don't let this market go up or down or do anything. Wait until we come back. And kind of an unwritten rule that they won't pull too many stunts going into a time like this, because then, of course, they'd all be stuck back on their own trading desks, and they don't want to do that. They want to be out there enjoying the last week or so that they can with their kids before school starts. And there is no place more packed than the Hamptons right now for financial traders. In fact, if the Hamptons sunk, we'd probably lose 90% of the A team of all of Wall Street this week. But yeah, I don't see a whole great deal other than this thing going up a few points or going down a few points the rest of the week. You know, if something really amazing in some of those earnings did come out, I think maybe something would happen. Anyway, not only has Russia made history on this day in 1998, it is making the same issues today. And they, once again, the ruble's hitting much lower levels again today, which is one of the reasons I picked this out of all the things that were going on out there. But it is and continuing to be an issue that lower crude prices are really putting the whammy on the Ruskies. So we will see how that all works out. Anyway, that's pretty much it for my slides. We're going to get into doing a little bit of chart work here. And of course, probably the news of the day is Tesla. It's not uncommon, especially in very light markets. And one of the reasons I do not like to be short light markets are moves like this off the lows for Tesla. It is not uncommon for very light volume and stocks with high short interest to be run this week. In fact, that's probably about 90% of all movement is going to be shorts being fed a little bit of dose of their own medicine this week in very light volume. And one of the oldest and one of the first things I ever heard for a chestnut is don't be short a quiet market. And my guess is this is going to be one of the most quiet we've had in months. We continue to have a market that's more wrapped up in making sure there's no volatility because that's what the Fed wants. And, well, we played it before, but I want to play it again because this pretty much sums up exactly what the Fed wants. This is L. Arian, what, 3 or 4 months ago?
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous. Right.
Because really good days in the markets, you mean? Really
good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry about
down
financial...
days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking or will switch the other way around.
So anyway, let me turn my audio back up so I can listen to myself. Anyway, that's pretty much what we're all about. The Fed would love to peg this at 2,100 and drive us all batty. I think that they understand that any higher is just putting more air into a balloon. They'd love for the markets to eventually just be flat here at 2,100 on the S&P cash and catch up to them. That probably will not happen. Every other attempt to manage the markets, a la central planning, have always failed. And it will be very tough to figure out how they do this in the future. But one of the reasons that I think Tesla is notable today is just the utter bovine excrement that some of these folks are throwing around on Wall Street. Of course, a gentleman is now saying that his new target is $460 on Tesla. That means that at its current growth rate, you would have to only hold it for 20 years to be worth $460. Kind of tough for me to see it. Eventually, this thing's going to snap, but it is not uncommon to find a lot of Wall Street goofballs playing games during this incredibly light volume market. And normally, this is the kind of thing that gets you some flack back. And certainly, the Morgan Stanley analyst that came out waving the 460 out here today is getting that back from one of the big men of Wall Street. Doug Katz and a lot of other people are basically giving him the shotgun of truth to this today. I don't know what you can say other than that. It just kind of not Marks of Queensborough's rules to be doing this kind of stuff in this light week. And they pretty much said as much that they do not appreciate it, much less that the guy is totally insane. I keep doing the numbers on it. It's worth 40 or 50 bucks against any kind of forward earnings estimate. But, you know, I've seen a ton of stocks like this sell at many multiples of what they'll ever truly be worth. This is just one more of the same bunch. Somehow Tesla has made a car that no one else can make. They're going to capture business that no one else can get. The reality is that their 25% margins will become 20, 15, 10, and then 8 like the rest of the industry over time as the industry actually figures out what they're doing and covers up or comes out with something better. And if anybody's ever seen, what was it, Tucker, the movie about the guy trying to come out with a car in the 50s, looked like a Hudson or something, probably going to end probably the same way. If there's a business on Wall Street that is overestimated, it is the car business, and I don't see that changing anytime soon. But we can see it. It popped up. They're going to get it going. But this is normally a good sign that the end is nigh on stocks like Tesla and others. When people go bat crazy with their estimates of stocks that are never, ever going to see those numbers. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're looking at the options curve for expiration on Friday, basically showing 209 as of Friday's close. And this can move a little bit, but it's not going to move a great deal. This really shows just how locked that the option market makers believe, at least in the SPYs, that we'll be moving. We're a little higher than that. That's not uncommon. As I said, the bias in any week at the end of August in the summer is going to be slightly higher with a light volume, because shorts are always going to be the weakest hands at any table, unless the market's absolutely cratering at the time. They're almost always going to be the weakest hands. They're going to be the ones that trade quicker and faster, that won't sit on their hands through any kind of pullback. So that's why you get such wild swings in bear markets, is that you've got very quick fingers for bears. They'd be good fiddle players. Let's put it that way. Anyway, this, I've done a whole thing on this in a webinar, but this is one of the patterns that I call the goblet. And it's fairly predictable. But when you get these kind of patterns and the numbers that I've got, we're basically talking about 10 points up or down, probably on expiration on Friday. So don't expect a lot. So 2110, 2115 on the high side, probably on the S&P cash, 2085 or higher, probably for expiration on the low side. You know, we're going to have some earnings coming out. That'll add a tiny bit into this, but for the most part, you're going to be beating your head against a bunch of B players on Wall Street and their infinite amount of cash and their one mandate, which is don't let this market go anywhere. Don't let any momentum get started that makes us have to come back from our Hamptons vacation. And this is the kind of chart that you actually get that really starts to say there's one more, but you rarely get it in the S&Ps. And that's a perfect V. That's a lot of times a stock itself. So, are we going to see probably Apple trickle up a little bit each day into expiration? The answer is more likely yes than not. And what do we have out here? It's up $1.51. Can they get this up to 120? Take a quick look at the options. I haven't yet. Yeah, they might. So you maybe got a couple more bucks in Apple. My guess is that 120 is where that thing expires this week on Friday at the close. There's a few others out here that are always interesting, but I don't see a lot. Google, way above its number, but that's still tracking from the huge move that they had on earnings. Anyway, a handful of stocks out there that show more. Had a question in the den that asked about IBT and XHB. Of course, we've got the home builders out here turtling, doing a little prairie dogging, sticking their heads out. And, of course, you needed 4.8 million shares going back to the February 25th high. But, again, this is where stocks can get a little farther out ahead of themselves into this light volume, especially if you had a lot of people that were light volume. I'll go back to this, and probably the deciding factor is going to be Lowe's and HD this week. Just from going by them in this area, anecdotally, I would say that their business is down. I go by regularly. I probably go to Home Depot once a week, probably Lowe's every other week, pick up stuff to have the great thing. But, yeah, whack-a-mole. They're going to be popping things up and down. But it's hard for me to see that any of these home builders are really getting any kind of a huge business going on in the depths of the summer. It just doesn't ring to what I see for business and the people supplying the lumber and everything, at least down here in Florida. But we'll know a lot more this week. I am all cash. We talked about that at the end of this last week. I'm fairly bearish and remain bearish, but knowing that this market could move up a little higher. And even in this morning's newsletter, I said, futures are down a little bit this morning, but I bet by afternoon, even the faint memory of lower prices are way behind you in the rearview mirror when you close this afternoon, because the tendency is for light volume to have the weakest hands, which are the shorts, always to cover. Not a great deal of money ever to be made in that proposition. 10, 12, 15 points in the S&P cash for weeks play. It doesn't do a lot for me. Anyway, we'll be back and talk maybe a little stocks that may have some movement this week. At least we're going to try to look for some.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back. We're 2,100, just a couple of points underneath at 1.8 billion shares. We're probably going to come in at about 2.5 billion. I suspect by Thursday, maybe we get up to 3 billion by the end of the day. One day this week, probably Thursday. We need to get Walmart and we need to get Salesforce out of the way. Those are probably the 2 big ones. Somebody in the den was bringing up Apple, and I already said that I thought it was going to probably close out Friday at $120. But there's something else that we need to be aware of course, and that is the Apple PR machine. And, they came down, they touched their gap. They did it with some decent volume. My guess is we're going back down to about 105, 103, something like that in the near future. But September 9th, I think, is the next rollout of their next iPhone S, and everybody on Wall Street that's in this dog now knows that probably the top is in, and they're all going to be out there. There's going to be an endless procession of sycophants telling everybody about Apple's, how the new phone is going to do a whole bunch, and only 25% of the people that wanted to upgrade actually got to upgrade, and that Apple just turns lead into gold, and it's just a continuing thing that goes on forever out there. Of course, they've had 3 major mistakes this year, and it doesn't look like anything's going to turn around. If you want to throw Apple TV in there, you could say 4 major mistakes this year. You only get so many. But my thesis still is that they've hit the highs that they're going to hit this year. And for the most part, it is down and to the right for the foreseeable future. Just in the fact that we've hit probably the high water mark for superphones. We've seen it already for 9 months in Samsung. My guess is that we'll start seeing these numbers get a little tougher. Will Apple be out there buying their stock, telling everybody they're going to the moon? Yes, they will. But just remember, the guy that runs the show gets $500 million if it's over a certain price on the 5th year. And he's 3 years into it. All he wants to do is make sure that this thing holds up for another 2 years. He gets his $500 billion. No, 500 billion, 500 million, excuse me. $500 million, and he exits stage right. That's all that's left into it. For him, at least I think so. I mean, there's probably bragging rights, but in the back of his mind, they did and gave him one mission, and that was to keep this stock up for the next 5 years while they distributed it to the morons that came in and bought it late. And will there be trading opportunities between now and then? Yes. Will the PR, as soon as we come back from the vacation and the 3-day weekend, will the drums be beating at a fever pitch? They will. But my guess is you're going to see a lot of people on Wall Street selling into it for all those retail traders that want to buy it back at these highs. It looks like it's going to be a tough row to hoe, as they say in flyover country. Other stocks. Oh, I want to look at Tesla a little more, TSLA. And, you know, you're back into this gap where it really did gap down. It came down on huge volume. And I've been hoping that they get this thing back higher. In fact, I would like for this thing to get back into 270, 275 area on light volume so I could pull the trigger on it short again. And that would be great. Okay, let's go back and look and see what's in play today. I've got some other stuff on my list. What else do we have out here? Okay, Mr. Sprinty's up in the thin volume. Unveiled its new upgrade plans for iPhone users. Any new or existing eligible customer can move to the iPhone for $22 a month. That's not too bad. Nice little pounce back up for Sprint. They're back into the consolidation or congestion range that goes back to early May and went all the way through third week of June. So probably that's about as much as you can get and look for. So what else? What else? KKR is down a little bit. Take a quick look at it. KKR. 3.4 million shares. This thing is just barely holding on to the level of January 16th, where you had 3.8 million shares. Got into it a few days ago with 3.4, getting back into it today with 2.8 so far. Just looks like it's going to be very tough for these things to hold on if crude prices remain low. TMUS. T-M-U-S. Now, this one is starting to break out, and I continue to think, this is a pretty light volume, but I continue to think that this guy is going to be a pain, a thorn in the rest of the cell providers' side until he gets them to buy him out, or he gets Spectrum, one or the other. But talking about busting out on light volume, 18 million shares on June 4th at $40.77. And, of course, we've gone sideways up against that with fairly light volume today, 2.8 million shares. So not seeing a lot of juice in those other ones. Again, lower energy prices are pushing Halliburton. It's down 2%, $41.12. Earlier in the day, this looks to me like that $37.21 low from December 16th, 2014 is going to get tested here sooner rather than later. That high volume lows out there that need to be tested. My friend Andy Heck had a bunch of new articles on Seeking Alpha, a great deal of them. But I will point you to one of them because I give Andy ideas for headlines for some of his articles. And I love this one. We were talking about movies in the den, or at least people were talking about movies just a little bit. But we were talking to him, and I said, you know what would make a great title for that article? And I said, Raging Bulls may lose their De Niro. And I thought, I wonder how many people know and have seen Raging Bull. I mean, if you're probably of my age, you probably saw it. But no De Niro? I thought that was gold. In fact, that is my best headline of the year. You can read the rest of the part of Andy's article if you want. But if you just read that headline, I think you'll like it. He changed it a little on me, and it is, will Raging Bull Gold Bulls be losing more De Niro? Anyway, I liked it. Other things of interest out here today. We did Halliburton. Kites up 5%. Provided a clinical update. Take a quick look at this. Doesn't look like it's really come out of anything. Just a little pop in a consolidation range. It did find support at previous gaps around that $59 and $61 level. It's kind of at the high end of that now. Doesn't look like there's anything out there. SUNE. Yeah, Sun Edison. Yeah. Boy, I tell you, it still looks like it needs to test the $11.78 level. 93 million shares on that low day. So you still need to get that retested out there, but maybe that might be a good play in the near future. Hertz, HTZ. Insider purchases popped the stock a little bit. So, I don't think there's much there. Solar Fund, SFUN. A lot of weakness in these solar stocks. As I've said before, these things are all non-producers. They lose money. The only way that they've been in business is huge amounts of kickbacks to politicians to give them more money so that they can stay in business and pretend to make money. But Solar Fund Holdings, SFUN, down today. See what they're saying out here. Weakness in China internet names, all lower. Let's see, what else do they have? WOKU, one of those out here, also lower. People trying to get out as quietly as possible of the Chinese market. This is actually not looking too bad, this Yoku. It's got the July 8th low at $17.74, 5.1 million shares. And what is it, 35 cents higher than that today on 1.1 million shares. So there may be a bottom in the Chinese market soon. You might want to keep an eye on that. Fang, one of my favorite books as a kid, White Fang. I don't know how many kids read those books anymore. They probably would say they were too violent for children. I still loved them. All those Call of the Wild books. Diamondback Energy, symbol is Fang. I bet you never forget that symbol now. White Fang, Diamondback Energy. I've got you locked in. But, nice little pop out here off the 62.23 low from July 27th. But looks to me like nothing more than a 50% retracement so far. Zoom back in here. Yeah, 50% on Friday got you to 74.02. So it could be an ABC down. That ABC would probably take you back to that previous low. 1-to-1 would take you to $50.60. So if you could get it up probably at the 618, I bet that brings you back down to the 51.69 December 15th, 2014 low. But yeah, $56 probably is fairly decent support level out here, but this might be a decent play. I'll have to keep an eye on that. If energy remains low. Let's see, what else do we have? If there's anything else out here wanted to take a look at. I think that's it for the moment. We got about 3 or 4 minutes on this segment. We want to look at a few other stocks out here. And a lot of discussion today, mostly because of Zulily. This horrible dog came out and popped today back into its gap down, but came out way, way, way above. I think it came out at something like $20 or $22 for the IPO. Opened that day in the 40s. Pulled back a little, went up to a high of $73. It's been on a downstream tear ever since then. Did sell out this morning, or agreed to a buyout this morning. So it's still at $18 and change, still way under its IPO price and its first day trading price. So the discussion today on financial infotainment, cable television, is how many of these other stocks are just like this? The answer is about 80 to 85% of them, if history holds up. But I heard something that is a word of warning to any trader or any investor, and that is when people say the word TAM. As soon as you hear, I heard that on Tesla today, and frankly, if I was president, if I heard the word TAM spoken in financial circles, it would give you the right to shoot the person on the spot. You'd have to have photographic and you'd have to have taped proof that he said the total addressable market. But this is exactly the kind of hokum that people spread about, especially late in the summer. And that is, there's 7 billion people on the planet. There's 8 billion people on the planet. So therefore, you've got, half the people got it. Oh, what a load. Half the people are existing on $1.50 a day. They aren't going to be buying a Tesla. They aren't going to be buying anything else. They can buy a car that's $15,000 or $20,000 from Kia. They aren't buying an $80,000 or $100,000 Tesla. And since the days of the dot-com revolution, where everybody was speaking about eyeballs, there's always been some kind of metric that no one has ever thought about before, because, of course, we're all stupid today. Everybody in the past was stupid. No one knew that rules of finance had some kind of finite loss. These people are smarter than those folks today. Well, the rule of finance is that it doesn't lend itself to innovation by counting eyeballs. It counts dollars, it counts dineros, and it doesn't count a total addressable market. Well, of course, the big lie in Tesla today was that because everybody's going to be doing ride sharing, that they're going to make all this money, that their little mobile autonomous vehicles are going to be running around, picking everybody up. Tesla is going to own that whole market. Oh, my good. I am calling bovine excrement on Wall Street today. Bovine excrement, I say.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And quickly, we're going to look at a few things out here, and then we're got a few other things going. I just wanted to see what IBM is doing. It looks like it's going to meander its way back to 149 to 52 fairly soon. And see if there's anything else going. Let's take a quick look at Boeing. Then I got a couple of things to bring up before the end of the show. Yeah, IBM's just in a little consolidation range around the $145 level. So not a whole lot better than that. Just between 140 and 150, it looks like. A few things that you should know if you haven't heard already. We're getting a new Fed president. The new Fed president is here. The new Fed president. And guess what? He came from Goldman Sachs. What a surprise. Mr. Kaplan is going to be the new Fed president of the Dallas branch. My understanding is he will be able to vote in the September rate hike. And I don't know if that's going to be enough to swing this, although it is going to change the makeup of the voting members somewhat, a little bit anyway. Also wanted to give a shout out to a former football player, Mr. Harrison, who is telling everybody that he's sending his son's participation trophies back, and that when they actually accomplish something, that he will let them have those trophies. Let's give them all a round of applause. We're raising far too many wimpy kids. Let's give them a little backbone. Let's let them know that they probably really don't get a trophy in real life without gaining something. But we shall see that. Anyway, other things going on before the end of the day, last couple of minutes. Let's look at Home Depot, because I think that's going to be, it's going to be kind of what we're really talking about out here. You know, this thing's turtling, prairie dogging above that. You know, you need 12 million shares to be conservative. You need 8.4 to be non-conservative. And you've got the last 3 days, 6 million shares, 5 million shares, 3.5 million shares today so far. So I don't think that that's going to actually change much. We're probably going to get the surprise either up or down, depending on what it is. Lowe's, of course, also out. Not doing as well, apparently. This is getting back up to that area. But you're into that candle where this thing came down on huge volume on the 19th of May. That was 8.7 million shares. We're back up today with 3.2 million shares in that. My guess is we pull right back into the trading range. Someone asked earlier in the show what I thought, and it just looks to me like a lot of these things are stretched, and they'll probably have maybe a little push up, and then a couple of days right back into the trading range. I don't see any kind of juice to make these things pop out of this trading range. We'd have to have some enormous news about housing sales, and I just don't see it. Looking fairly everywhere around that we're going to see anything that momentous. I leave you with this thought. I am at war with somebody, and that somebody is fire ants. Watch out. They are horrible, and they attacked me yesterday. And as soon as the show is over, I'm going out to give them their due with some lighter fluid. Just watch out. Those little beasties. I've never been stung by one before. Well, they're pretty much. And that will be it. We will be back tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.